Hello and welcome to our update on Quay Global Investors. My name is Jonas Daly, Head of Wholesale Sales at Bennelong Funds Management. Today I'm joined here by Chris Bedingfield, Founder and Portfolio Manager at Quay Global Investors. So Chris, we'll start with a first question generally on why global real estate?
Well, firstly, it's a very large investment opportunity set. We estimate that global real estate has a total value of approximately $2.1 trillion. So it's a very large investment universe. It's also quite diverse as well. The top 10 global listed real estate companies account for around 20% of the total market. Compare that, say, to the Australian Stock Exchange, the ASX 200. The top 10 stocks account for approximately 45% of the market. So it's a very diverse and large opportunity set. I think also the returns. So for the 15 years to 2015, listed real estate, unhedged, has outperformed unhedged global equities, unhedged global infrastructure, and unhedged global bonds. So the returns have been very attractive relative to other asset classes, and of course over the last 5 years has significantly outperformed Australian shares and Australian listed property. I think finally, global real estate offers investors an opportunity to invest in themes not readily available to local investors, particularly in the areas of real estate. In Australia, the Australian listed property market includes office, retail and industrial properties. We invest in those sectors, but global listed real estate also gives you opportunities to invest in areas such as health, student accommodation, self-storage, data storage, and also affordable accommodation.
Great, that's interesting, Chris. So what is the strategy of the fund?
The fund strategy is focused on investing in between 20 and 40 listed property securities. At the moment, the fund is invested in 26 securities. Those securities typically will be backed by real estate, with the vast majority of income coming from rental sources. So we tend to avoid companies where a large component of their income come from development profits or funds management earnings. We like the stability of rental-based income. The fund also is unhedged. We find that is offering investors a lower risk proposition compared to a hedged product. And we also have a strategy of being quite diverse. So while the fund can be seen to be relatively concentrated in a number of securities, we look to diversify our holdings across a number of different asset styles. So at the moment, the fund is invested across 9 different types of asset styles. So we offer diversity as well as some concentration across select names. But ultimately, the aim of the fund is to preserve capital and to generate approximately a 5% return above CPI over the long term.
And just in regards to sectors and themes, Chris, what are you seeing at the moment? What's looking interesting?
Yeah, so the major themes that we focus on for the fund include the ageing population. So in the United States, for instance, approximately 10,000 Americans are turning 65 every day. That will continue to occur for the next 15 years. So we see the ageing demographic as an important and a significant theme. Another theme is retail property disruption. Clearly there's been a big rise in online retail over the last 10 years, and we see that disruption creating risks but also significant opportunity. Another theme includes student accommodation, where the demand for higher education, not just from Western economies but also from emerging economies as well, the demand for Western style education is increasing. That is putting pressure on student accommodation and providing tremendous growth opportunities in that sector. And finally, another theme includes affordable accommodation, which is a theme not only here in Australia, but it's a global theme. And we look to invest in those areas because there is a good secular long-term tailwind in that space.
And Chris, are there any particular stocks that you like at the moment?
So in manufactured housing, we own a company called Equity Lifestyle Properties. They own 140,000 sites in the United States, across the United States. The affordable housing component for Equity Lifestyle is really broken up into 2 components. First is manufactured housing and second is recreational vehicles. So the business model is quite unique in that the company owns the land and the tenant will own either the house or the recreational vehicle. So the depreciation and the capital expenditure stays with the tenant, and we own the land and generate rent on the land. We like the space for a couple of reasons. Firstly, it's extremely cash flow generative because of the very low maintenance capex of the business. Secondly, it has proven to be very recession resistant. So even during the global financial crisis, the same store rents for manufactured housing did not decline at any stage during that period. It also benefits from good long-term and short-term tailwinds. The long-term tailwind being the ageing demographic, who tend to, baby boomers will sell their family home, release a lot of equity and buy into manufactured housing, which is typically much cheaper than the family home. A manufactured house will cost anywhere between $30,000 and $100,000, so they can release a lot of equity and retire in communities of like-minded people. So we see that as a long-term positive tailwind. And in the short term, the lower oil prices significantly increased the interest in recreational vehicle sales. In fact, in the last quarter alone, RV sales were up 12% compared to this time last year. And that demand from RV sales, they'll need to park those particular RVs on sites, and Equity Lifestyle Properties offers those sites. So we see good short and long-term demand coming through for that company. The long-term earnings growth for this company is expected to be well above inflation on our estimations. In fact, last year alone, earnings were up 10%. We expect them to be up 10% again this year, and we think it's a very good long-term story. So this company ticks every box for us. It plays to the demographic tailwind. It's hugely cash flow positive. It has great recession-proof characteristics, and it's a good example of the type of investments we look at Quay Global Investors.
Thank you, Chris. As you can see, there are plenty of good opportunities in global real estate. The Quay Global Investors is a great opportunity to blend a concentrated fund in with other core holdings, or the fund may also be used as a standalone option due to the diversity across various sectors. If you'd like further information, please visit the Bennelong website. Thank you.